Welcome, everybody. My name is Bob Carrillia. I'm a partner at Resolve Partners. Today, I'm having a chat with one of my partners, Steve Cummings, who is the founder and president of Resolve Partners. So, first of all, welcome, Steve. It's always great to have a chat with you.
Hi, Bob.
Okay, let's jump right into some questions here, Steve. Let me ask you a question about another one of the drivers, and that was recurring revenue. When I think recurring revenue, I immediately think software company where there's a subscription type model, and individuals or companies buy that software and they keep paying that same bill again and again and again and again. And of course, traditionally, or certainly in the last 20, 25 years, those companies have had, high valuations because it's relatively easy for investors to look into the future and identify what cash flow and profitability will be. But here's the question, not every company is a software company. Not every company has a subscription model. What if I'm running a manufacturing company or a professional services company where I'm pursuing contracts and I'm selling products and so on and so forth? Is there a way that I can demonstrate that I've got a recurring revenue model, or is that just simply not possible, unless you're a software company?
No, it's certainly possible, Bob. The point to understand here is what investors are looking for is sustainability of the business, of the revenue and the profitability, sustainability into the future. They're looking for predictability of how the business performs financially into the future. So they're looking to buy an income stream, a level of profitability that carries on or grows into the future, and they would like relative assurance that those monies are going to come in. So let's translate that into some of the words that you just used. When we talk about recurring revenue, that is totally consistent with a view from professional investors of sustainability and predictability into the future. However, there are different types of quality that a professional investor would see out in the market. And when they see different levels of quality, they ascribe higher or lower valuations depending on whether the income streams are of higher quality or whether they're of lower quality. So what do I mean by that? Well, if you're a subscription company that has a business that operates on an uninterrupted subscription that continues into the future with monies being taken either annually or monthly on a recurring basis, out in perpetuity, those models are very valuable. Not everybody deals with them, but they are very valuable. So the professional valuers in the market would ascribe a higher valuation multiple of profits, to those types of income. By contrast, however, if a business owner does not have a subscription business, but does have a contractual business whereby it signs legal contracts with its customers that continue, for example, for a year. And then at the end of that year, hopefully the contract will be renewed, and hopefully will be reviewed for several years beyond that. If that's the case, then that contractual business and the evidence of historically returning clients, that evidence is also valuable to an investor. Is it as valuable as a subscription business? Possibly not, depending on what the life cycle of the customer base is. If it's 5, 10, 20 years, then then the valuation goes up accordingly. So a contractual business where there's evidence of a contract for a period of time is absolutely falling into the definition of recurring revenue. But we as advisors need to help the business showcase the level of recurring revenue, recurring profitability in a slightly different way, but nonetheless valuable way for businesses. By the contrast, if there are businesses out there that sign contracts, but they're one-off contracts from the point of view of one delivery of a particular amount of goods or services, that is also valuable to an investor, but it's not as valuable as a contract that continues into the future, perhaps on subscription, but one that has a life that extends beyond immediate delivery.
Right.
So the one-off nature of business, particularly where it is supported by a historical trading record of people coming, knocking on the door and or ordering on a singular basis, but a repeatable basis, but not in a particularly forecastable way. Those businesses have a lower multiple, but can have a justification to in value terms if there's a historical trading record that showcases the financial growth of the business.
Okay. Interesting. An interesting word that you used there was evidence, and record, something you don't normally think about when you think about a company. But, I guess if I'm an investor looking at a company and it's not a subscription model, but if I see a record because they've got a good customer, relationship, management system, a CRM, or if I can, look and see that they've had clients that come back month in and month out, year in and year out, and that there is a good, contractual agreement with those clients, that certainly gives me comfort that these are clients, especially, if the contracts are written such that they're transferable to the next owner. That certainly gives me comfort that this is a recurring revenue business because we're seeing the same clients coming back again and again and again. So I totally get it. But, the word evidence is something that we really need to think about, that someone who is looking to sell their company needs to have that evidence. It's not just my word, hey, these guys are good for it. It's a matter of, can you show me the evidence that you've had, not just over the last week or month, but over the last years, that these clients do come back and do continue to purchase your products or services.
I'd like to add to the point that you make, because it's a very important one, Bob. Many businesses will be able to demonstrate a historical track record, as in looking back. They'll often be able to present 3 or 5 years worth of financial statements, which show the level of trading, hopefully growing, going up. However, one of the things that we discussed earlier was that the investors want to see want predictability for the future. They want to see the sustainability of that historical track record into the future. So you and I certainly, one of our focuses is to ensure that the pipeline of future sales revenue is good and strong, and that that our clients can evidence that pipeline. In other words, we are presenting the evidence to third parties as to how the company is going to perform in the future. And if we can put together a process for the client, which includes having the evidence from a customer relationship management system on all of the customers and how they are expected to present in the future, if we can show that evidence as to how the business, customer by customer, is likely to perform into the future, that is very valuable to a third party and improves the confidence on whether the business is going to be sustainable, and can certainly, demonstrate a level of predictability into the future because of that information that we help our clients put together. So yes, I do agree that when a company is looking to transition, business owners need to put together, and this is where Resolve can help them, need to put together the evidence that they have built in their business around the quality of its people, its processes, its systems, and depending on how the business has been put together, the investors will ascribe different valuations to the quality of the assets that present and the evidence that they get shown.
Yeah. No, yeah, you make a great point. And that looking back and looking forward, is very important. And, that we live in a wonderful time right now, there's some great tools that are available at relatively inexpensive costs. They operate in the cloud, so they're easy to implement. And that's where, as that's one of the places that we love to work with clients, is putting that in place, giving them the processes that make sense, showing them how to implement those tools, and then showing them how to work with those tools once they're implemented. It's a wonderful time, because we've got access to all this great material and all these great processes and as I say, tools to achieve exactly that objective. So, great stuff. So just a couple more questions. When I take a look at those 8 drivers, those 8 value drivers, there seems to be some overlap in those drivers. When I think about, senior management team and I think about, HR, human resources, I kind of connect the dots and say, well, a senior management team, one of the strengths of a senior management team is their ability to, utilize a solid, HR information system. The ability to generate great margins is predicated on having good sales processes and tools in place. So to me they're somewhat interconnected, and I guess it's maybe an obvious question, but is that an accurate statement that when we're looking at these, when you're looking at these drivers for a particular company, that there really is, it's not looking at them in isolation. They do tie together to create an overall solid management system?
Oh, for sure. Absolutely. What is important is that, focus has been put on the foundational value drivers to start with before it starts focusing on some of the more sophisticated ways in which you can deliver value from a company. In the absence of, I'll give you a summary of what we regard as foundational value drivers in a second. But in the absence of any one or a couple of foundational value drivers, there is, in an absence of one or two of them, we would regard the business as being somewhat unbalanced. And it's really the balance that is the existence of certain qualities, but also the balance of those qualities, which will deliver predictable profits and cash flow for the business. That is foundational from the point of view of being of having the cash flow to invest in the future on the growth of the company, but also having the confidence to invest for growth in the value of the company. And often, Bob, and leaders have a lack of confidence because some of the foundational qualities of a business are not in place. And so we try to build the foundational qualities to give CEO and leadership the confidence it needs
Mm-hmm.
in order to be able to invest, maybe aggressively, but invest, investment capital for the growth of the business. But let's just talk about. Let's just, we talked about, what Resolve do, but, the focus on, the first level of value drivers is, we talked about senior management and having good leadership. That would certainly be number one value driver for sure. But having good quality human resources that are in place and who can deliver on the plans that leadership have put together, good quality from the point of view of being competent, good quality from the point of view of being capable of being trained, good quality from the point of view of having good motivation to deliver on the goals of the organization, the vision of the leader, the goals of the company, and the individual goals that the leadership set them. So having good quality resources to deliver on the plan that leadership put together, is key. Having a business model that delivers recurring revenue into the future. So a business model that leadership and management have honed and put together such that there is a high likelihood of achieving a level of profitability that not only pays the bills, but also delivers a satisfactory return to the equity holders is very important. Another value driver would be setting the prices of the products or services such that a margin is being earned on every sale or every service that is delivered. A strong margin is being earned on, and we do see businesses where products and services are being sold at a loss, and sometimes management don't know how much of a loss. So here's where financial and operating reports become hugely important. Segmentation of the results, so we know whether a particular customer is profitable, or whether a particular product or service is profitable, or whether a particular line of stock that we're selling is profitable. So financial and operating reports, having them available so that leadership can interpret them and adjust accordingly to make sure that good profits and cash flow are being made. Good financial and operating reports is absolutely a value driver, and sometimes business owners overlook that, but it is absolutely a value driver. Another area that we see as in place but with weaknesses is having a sales plan and a documented process. Often sales happen in a company. Having a good plan that the operations understand, which dovetails with the financial plan, which dovetails with the owner's or the company's objectives, having a sales plan that everybody understands and can articulate, and a process that then delivers it, ideally a written process that everybody can understand and work around. So having a sales plan and process is absolutely a value driver, which is often actually overlooked, shockingly. So that would be another value driver. Another value driver is operations being set up such that the goals that leadership set for sales and revenue targets, which then get delivered by operations when the orders come in, having an operations department that can meet the promises of the sales department on time with good quality coming out of the operations is another value driver. And then finally, as you quite rightly say, Bob, tying into the sales plan, tying into the company plan on what and the company goals, and tying into how operations deliver. The final value driver is the ultimate arbiter of the quality of what gets produced and delivered. The ultimate arbiter is the customer. And so are your customers happy? Or are they complaining because of the service levels that they get or the quality of what gets produced and so on? So having a satisfied customer is highly predictive of the valuation of the company. And when a company is looking to sell to sophisticated professional investors, rest assured that they will ultimately, in due diligence, want to talk to some of your best customers and to understand whether they're satisfied customers. It is highly correlated to value. So customer satisfaction and the level of customer satisfaction is absolutely a value driver. So, Bob, your thesis is right. Each one of those value drivers is somewhat interlinked, but nonetheless, each of the value drivers that I've just articulated for you is a competency that needs to be in place. There needs to be evidence that it is working, and in a perfect world, each of the areas need to work in harmony with one another. And that's what I called earlier balance. There needs to be good balance across each of those value drivers. And we want to see, as a minimum, each one of those areas as solid really before, or at least mostly solid before a company puts their foot in a significant way on the accelerator, really, in an aggressive fashion. You really want to see the launch pad for growth, those 8 value drivers that I just articulated, in place, in balance, and with minimal work to do before the company starts to make a move.
Yeah, no, that makes perfect sense. And that whole discussion about balance, you brought it together very well in that last the last couple of minutes. So final question, Steve, just this system of value drivers, this prioritized action plan that we've been talking about, is it applicable to every company, or is it really better suited to certain companies or certain industries? Or can any company, whether you're manufacturing, whether you're providing services, whether you're retail, wholesale, whether you're software, whether you're in the medical industry, whether you're in the automotive industry, do these apply to all industries and all companies, or could they apply to all industries and all companies in those industries?
The answer is yes, unequivocally yes. They apply to profitable companies, or they apply to not-for-profit companies. What we're looking at when we go into a business is benchmarking that business against similar-sized companies, and benchmarking them against similar-sized companies in their own space. Whatever that degree of specialism is. But if you think about the value drivers that I just talked about, management is having good quality management is universal. Having good quality employees trained and motivated to do a good job is a universal identifier. Having recurring revenues may or may not exist in different companies. But if you have a not-for-profit company, revenues, they do have to have some revenues in order to discharge the expenses. The fact that they don't have an inbuilt profit in the middle of their system does not mean that having contractual income that they can rely on to pay the expenses to operate their business is not an important identifier for them. Having for-profit companies, having an adequate margin is universal to all of those companies to be a success. To be able to analyze how the company is performing with your financial reports and your operating reports is very universal to all of those companies. Having an operations department that delivers in lots of different ways is universal. And finally, having customers, having stakeholders that demand a return on the investment into the company is pretty universal as well. So it is ubiquitous for sure. This is not no companies are fall outside the remit here, and anybody that is looking to pass their company on for value should certainly be analyzing how that value is framed by the market, where they compare to best in class, which then drives a position in the range of value, and having an understanding of what you put together compared to perhaps an expectation of value in an owner's head is really important to understand. Because if there's a gap, then either the business is going to have a challenge in selling, or in preparation to sell, we would strongly recommend that strategies are put together in order to minimize an owner's expectation compared to what the market is prepared to sell, minimize that difference. And there are strategies that we could recommend, to do that. But certainly, Bob, what we do in understanding the quality that is in a particular company is certainly, we can certainly benchmark it to comparable companies, and the framework is ubiquitous across many companies, and I would argue all companies.
Yeah. No, that's terrific, Steve. You know what? I think this has been a great discussion. So thank you so much for sharing your insights. I think what we can also do is take a look in future podcasts at the other levels. We've got the level of predictable growth. We've got the level of predictable value. I think it would be interesting for people to hear more about the sort of drivers that you would look at when you're, at that stage of a company. So that's something that we can certainly look forward to doing in the future. But in the meantime, of course, if anybody wants any additional information on this, they can certainly visit the website at, and where should they go for that, Steve? What's the website?
That's www.resolve.ca.
Perfect.
Resolve.ca.
Yep. Perfect. Or they can reach out to either one of us. In the meantime, a great conversation. Thanks so much, Steve, and look forward to having a further chat in the future.
Thank you, Bob.
Okay. Take care.